Ladies and gentlemen, good day and welcome to the Axis Bank conference call. Participation in the conference call is by invitation only. Axis Bank reserves the right to block access to any person to whom an invitation has not been sent. Unauthorized dissemination of the contents or the proceedings of the call is strictly prohibited, and prior explicit permission and written approval of Axis Bank is imperative. Further, this call is hosted for discussing Axis Bank's acquisition of Citi's consumer businesses in India. Kindly keep the questions related to the acquisition only. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of the briefing session. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. On behalf of Axis Bank, I once again welcome all the participants to the conference call. On the call, we have Mr. Amitabh Chaudhry, MD and CEO, Axis Bank. I now hand the conference over to Mr. Chaudhry. Thank you, and over to you, sir.
Faizan, thank you so much. Thank you everyone who's on the call for joining us at a short notice. We also have on the call Rajiv, Subrat, Arjun, and other members of the bank's leadership team. Axis Bank, one of India's largest banks, today completed the acquisition of Citi's consumer businesses in India ahead of schedule. We are delighted with the overwhelmingly positive response we received from Citi customers and employees. We are also grateful for the support and guidance we received from the regulators during this period. The Citi franchise has long been considered the gold standard in consumer banking in India. We are aware of the legacy we are inheriting, and we will build on the franchise through our superior product offerings and technology. This acquisition is an important marker in the short history of private sector banking in India. Indian banks today match or better world-class benchmarks on service, technology, and business metrics because of the enterprise, prudence, and the financial infrastructure built by the regulators and the government. Axis Bank is acquiring this business, but in more ways than one, this is a milestone to share and cherish for all Indian banks that contribute to this sector. We welcome the Citi customers and colleagues to Axis Bank today. We have prepared ourselves to help them transition smoothly and seamlessly. We expect Citi customers and colleagues will experience the comfort of the familiar along with the thrill of our aspirations as we continue on our goal of becoming the most customer-obsessed bank in Asia. I'll pass this message a bit more. What do I mean when I say comfort of the familiar? We have seen a strong acceptance at 96% by Citi employees across all grade and levels. The Citi customers will continue to enjoy same benefits and privileges with no changes in their existing bank account number, credit debit card numbers, checkbooks, IFC and MICR code. They will continue to be serviced by same relationship managers and teams. All the 21 in-perimeter branches remain fully equipped to serve the incoming customers. We are also equipping 13 additional branches that would be available for incoming customer servicing during the transition period. The necessary IT applications and trained staff have been deployed at acquired branches. All the services to the incoming customers will continue to function as before as the same teams from Citi move to Axis intact. Next, what do I mean by thrill of aspirations? Axis Bank has set itself an ambitious agenda as it powers the next decade of growth in India. Axis Bank has been working on its TPS strategy of strong granular growth, premiumization of its base, and building a distinctive bank based on digital capabilities and customer obsession. Our performance over the last 4 quarters has given us the confidence of building on the Citi franchise to accelerate our journey. We will be better together. Through this business acquisition, Axis Bank has materially scaled up its premium portfolio on both sides of the balance sheet. Credit card advances have grown by 42%, with our market share going up from 11.4 to 16.2%, led by increase in the affluent card base. Similarly, the liability franchise, which is a critical component of any bank's balance sheet, has also benefited by addition of almost rupees 40,000 crores in balances, over 1,600 corporate levels with deep relationships and an overall 8% increase in CASA balances. 52% of the deposits are contributed by Suvidha salary account customers, making this a very valuable customer base for us. We're also consolidating our positioning as the third largest wealth management franchise with addition of almost rupees 95,000 crores of AUM, an increase of 33% to existing wealth AUM of Axis Bank. The premium retail franchise on both sides of the balance sheet has thus benefited significantly. On the other hand, the erstwhile Citi retail franchise will now have access to massive national scale of branches, 4,900 of them, and 16,000 ATMs and recyclers, as well as cutting-edge digital plus data science assets through the Axis platform. Further, we have provided the changes in portfolio acquired as on 31st Jan 23 compared to 30th June 2021 on slide 9. In terms of the execution of the business acquisition itself, we are happy to report that we have accelerated one of the most complex business acquisitions in the history of banking sector. The business acquisition has been carried out in 7 months post receipt of CCI approval, a strong testament of our execution strength. Teams on both sides have worked extremely diligently to manage the several moving parts. For this, we want to thank the teams in Citi and Axis as well as customers who have been gracious with their support. We also want to place on record our deep appreciation for the regulator, the Reserve Bank of India, for the constant guidance and directional inputs. That said, the journey has just begun. From here on, we need to ensure that we can unlock the synergies for all stakeholders, employees, customers, and our investors. The opportunities for synergy and bringing the core strengths of Axis and Citi's teams together are tremendous. We will focus on franchise consolidation, value enhancement for the combined customer base, and transfer of best practices. We have a clear plan across 60-plus synergy levers that have been identified. We are energized for the road ahead as we look at the journey so far with a sense of joint pride. Coming to financial implications of the acquisition, we have consistently been communicating that, 1, we expected natural attrition in the numbers due to the extended period from divestiture announcement by Citi of its India consumer business and closure of the transaction. 2, requirement for express consents across liability products. And 3, change in business cycle from diligence period to closure. In order to protect the bank's interests, we had proactively built price protection mechanisms in our agreements with Citi. The key business parameters on which our valuations was predicated have remained within an acceptable range. The cash purchase consideration for the acquisition based on the closing position of assets and liabilities as at 31st January 2023 stood at rupees 11,603 crores. This cash consideration is subject to a true up or true down basis the adjustments for changes in the business position from 31st Jan 2023 to end of day February 28, 2023 as per mutually agreed timelines. Slide 15 provides details on changes in consideration. We have significantly improved the trajectory of our operational metrics with significant improvement in NIMs and consolidated ROE. Our capital adequacy position remains strong with capital adequacy ratio, CAR, including profit for 9 months financial 21-23 at 19.51%, with CET1 ratio of 15.55%. We net accreted 31 basis points of CET1 capital in the first 9 months of financial 23. The purchase consideration and assets acquired consume 177 basis points of CET1 capital. This will be funded entirely from existing balance sheet. Given our operating performance and post-acquisition capital position, we will have sufficient capital post-acquisition to fund organic growth of our existing and acquired business for a reasonable period of time. As consistently disclosed, we will take a one-time charge to Q4 financial 23 P&L for 1, goodwill and other intangible prudent amortization, 2, policy harmonization costs and provisions in areas where Axis policies are more prudent and conservative, and 3, implementation expenses comprising transition costs, banker fees, duties, and taxes as applicable. To summarize, we have completed the acquisition before indicated timelines. Number 2, we don't need any capital to pay for this deal. Number 3, numbers are better than our initial expectations for Citi staff joining the Axis Bank platform. Number 4, changes in key business parameters largely remain along expected lines. And number 5, the speed of completion of NLD1 has increased our confidence to complete the full integration seamlessly within 18 months post LD1. We continue to be optimistic about our future. Thank you, and now we'll take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. If you have a follow-up question, we would request you to rejoin the question queue. The first question is from the line of Mahrukh Adajania from Nuvama. Please go ahead.
Yeah, hi. Congratulations to you and your team, Amitabh. My first question is on the deal pricing. So it's a bit lower than earlier indicated. Also that you had indicated a certain amount of deposits and AUM. So the AUM is what you had disclosed and probably the deposits look lower. So how does it all tie into the current pricing of the deal?
Hi, Mahrukh. Thank you for the question. Mahrukh, the way we had structured the deal was we had a diligence reference number and we had assumed attrition both for consent as well as natural business attrition given Citi was exiting the country as part of our valuation parameters. Attrition beyond these 2 parameters would have resulted in a value adjustment, which was the right protective structure to have from a bank standpoint. There were not 1 or 2, but there were more than 2 parameters basis which valuation needed to get adjusted for. And that's what you're seeing reflected on slide 16. So the 722 crore reduction in purchase consideration is a function of all of those parameters resulting in that value depletion.
Sure. And just in terms of the card business, so now would you have color on how the card portfolio behaved, as in terms of revolves? Was it in line with industry trends, in line with the earlier patterns? Because they have lost market share in spend. So.
Yeah, hi Mahrukh. My name is Arjun Chaudhary. I used to look after the Citi consumer business. I've just moved to Axis Bank, my first day here today. So I thought I could help you with the question on the credit cards business. So your question on how the trends have been. Actually, we've been very, very enthused and encouraged by the trends we've seen. And let me lay out a couple of them for you to help illustrate that point. Even after the after the divestiture was announced way back in 21, we've been able to hold on to and in fact grow our credit card acquisitions, which are now reflected in the credit card balances, which you see being almost intact from the period 11 months ago when the deal was announced. That's number one. Number two, in terms of how people are revolving versus transacting, I think there are some generic trends that we are seeing across the industry, and those are represented in not just the Citi portfolio, but every part of the portfolio. So if you look at the industry trends across the board, we do see that post-COVID, the revolve behavior across credit cards has come down, which means that we've all looked for and in our case found certain new sources of income around other ways of lending, other ways of growing our balance sheet, and other ways of increasing our fee-based income. For example, the spending that we see on the card has come back quite handsomely after the lull during the COVID period, giving us some upsides from what we had expected over there. There's been very good recovery both at a per card level and at an overall card level. So those are the two trends that I thought could help illustrate the point that on the cards business per se, I think we are quite satisfied with the way we see it having panned out from the period of the divestiture and then of course from the period of the announcement of the transaction up till today.
So revolves are in line or at least in line with industry trends, yes. Right? Or yeah, okay.
That is correct. So that's why I mentioned the point that
if you compare at points in time, they may be slightly down, but that's no different from what the industry is seeing overall.
Okay. Thanks a lot. Thank you.
Thank you. The next question is from the line of Adarsh Parasrampuria from CLSA. Please go ahead.
Yeah, congrats, Amitabh and team. The question was, you mentioned about the customer attrition and how you've been able to keep most of them. Wanted to check, Amitabh, in the next 6 to 9 months, when we think about, you migrated customers to Axis, over the next 6 to 12 months, would there be a natural attrition which will continue? How far are we from a normalized, attrited customer base versus, where you expect you will be, and from there you grow?
So Adarsh, thanks for the question. Please understand a couple of points. One, we have now taken over customers who have expressly consented to become an Axis Bank customer. We have also gone through a cleanup where some of the dormant accounts, some of the customers who said that don't want to work with Axis are actually no longer part of this franchise. So our expectation is that as they see same or better offerings from now the combined Axis, that the natural attrition of these customers will be lower than what you will normally see in any banking franchise, because a part of the cleanup to some extent has already happened, and there is an express consent which is in place. We do expect that obviously in the next 3 to 6 months, and we are talking about the overall transition period of 18, but in the next 3 to 6 months, things should settle down where the customers of the city will see same employees, similar products and services, more features being added, gradual transition into Axis products, Axis app, Axis credit cards, that hopefully with the 60 synergistic elements we talked about, and a lot of them relate to expanding the franchise on both the city and the Axis side. Why talk of attrition? We should be talking about bringing more value to the Axis franchise over a period of time. Have we dimensioned it? No. We will be dimensioning it as we speak. And when we are ready to share any numbers in some of those areas, we will do. Right now, we have not decided what we'll share and how much we'll share, but we'll definitely keep giving you a sense for how the acquisition is progressing over a period of time.
So I'll just harp on this a little bit. So let's say deposits are down from 50,000 to 40,000. Some attrition was expected. So you would not expect a repeat of another 10-20,000 crore attrition before you start growing?
Absolutely not, Adarsh, because, please understand that firstly, the June 21 number was at the peak of COVID, right? So this was when the Delta wave was just getting over. So there's no spend happening in the economy at that time. And so please first take that point into consideration. Second, 21 months have passed. We have gone through a full process of contacting these customers, having conversation. When I say we, I mean Citibank. I've gone through a process of contacting these customers, having conversations with them, making them provide an express consent, and then they have shifted to us. Day one, the savings account rate goes up. We have gone and checked feature by feature, every product, every card, every service of Citi, and we are trying to see as to how we can bring the best of both worlds together. I would expect that as I said, focus more on expanding the franchise, expanding the deposit base, rather than, we really worrying about attrition at this stage. But yes, as I said, we'll try to share progress with you on the acquisition as we move forward.
And Amitabh, the last question is on capital. You did make a point, and number certainly from a pro forma CET1 is better today, 13.7 versus under 13 when it was announced post the merger. So does that mean 13.5, 14 in the pre-COVID world was fairly large capital base? So does that give the bank a lot of flexibility around when you want to raise the capital now? How would you approach the capital raise, if at all?
So Adarsh, firstly, let me like to remind you that when we had announced the Citi transaction, we had said that we had talked about a pro forma CET1 of close to 12.9%. So we obviously are way, way better off in terms of our CET1 ratio than what we had anticipated when we announced the transaction. Obviously, this gives us a huge amount of flexibility in when, what, how much we raise and at what point in time we raise. As I said in my opening remarks, Today, we have a capital ratio. Firstly, our existing business is been a net additive to capital, and we are able to manage growth and add something to our capital. The capital position, the CET1 ratio we have ended up with post the acquisition is way higher than where we anticipated it to be. So yes, you have a huge amount of flexibility, and we'll use this flexibility. We are in absolutely no hurry, and there will be no hurry to go and approach the markets anytime soon.
Sorry, and last thing, Amitabh, with all costs rolled in, right, you all have put out a number of 850 crores of profit for this business. Once you adjust for everything, like how you take the business, and you all say it should be accretive to earnings from CY24. So, should one expect that as you do the integration cost, the profit dips, but in a year's time, the business profit is more than the 850 which was there, lock, stock, barrel, when you acquired it?
Adarsh, thanks for the question. I think the dimensioning of the 850 was after taking out group overheads that the city business in the city world was being allocated. The 840 that we had dimensioned in our pro forma disclosure in March 2022 did not have synergy benefits on cost or revenue built in. That's the context of the 842 number that we had then disclosed. Currently, our estimation of the range at which the business is running is between 800 and 850 odd crores, so no material change from our previous disclosure. To your point on estimated integration expenses, we had estimated 2,000 crores pre-tax, 1,500 crores post-tax. We stay with that estimate, and that expense will be incurred over an 18-month period.
Thank you. Mr. Paras Rampuria, may we request that you return to the question queue for follow-up questions. Thank you. We'll take the next question from the line of Abhishek Murarka from HSBC. Please go ahead.
Hello.
Your audio is clear. Please go ahead.
Yes, thanks. Thanks for taking my question, and congratulations on completing the deal. So one question is, in March 22, you had provided these pro forma financials, and broadly, the PAT estimate remains where it was. You just made a comment that in the 842, you did not build any synergy benefits. But in the current 800, 850 estimate, are those benefits built in, or that is like to like?
Abhishek, thanks for the question. I think if you read slide 16 in conjunction with slide 17 of the investor presentation, it is a like-for-like to the March disclosure. Synergy benefits should be over and above this. We had previously said that synergy benefits would accrue over a period of 2 years, and we carry forward that comment as part of the current disclosure.
Got it. And
just a second. I'd like to add that I did mention in my remarks that we've already identified 60+ specific elements of synergy where some work has already started. So obviously now we'll start in right earnest because now the acquisition has happened, but already a lot of work is going on to ensure, and I completely agree with the remarks made by Puneet, that we ensure that we get these to the table as quickly as possible.
Sure, got it. And just this charge of prudent provisions that you said you take in 4Q, would you be able to quantify the approximate amount?
Abhishek, it's difficult to quantify the amount. We have policies that are prudent. That provision will have to be taken basis balances that we inherit as at 28th February 2023. Those balances are subject to true up, true down. So we don't have the final balance to give you the number. We will give you that number in due course when we disclose our results.
Thank you. Mr. Murarka, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Vishal from UBS. Please go ahead.
Hi everyone, and thanks for this call. what will be the amount of adjustment which will have to go through net worth? So I think one is, of course, the goodwill and the cost of acquisition.
Vishal, thank you for the question. Effectively, what we've put out today is 11,603 crores of purchase consideration, which will encompass goodwill and other intangibles. That gets written off in quarter 4 because we said we'll write it off in FY23. So yes, that is a net adjustment to net worth. And we've called out the capital impact of that, which is effectively 177 basis points across goodwill write-off plus capital attributable to assets acquired. Insofar as policy true-up is concerned, like I said previously, we need the 28th Feb numbers to make a full assessment, and we'll make that disclosure in due course.
And do we get any tax benefit on this? Sorry for my ignorance.
Vishal,
in future?
Vishal, acquired goodwill was not deductible from a tax perspective. So that's the current position under the finance bill.
Okay. And the other one is on the ROE accretive. So I think, and I think just adding all the questions which are already been asked, we say around 800, 840 is the profitability of the business we acquired, right? And roughly that is the cost, right, which you would be paying in transition per year, like that 1,500 crore post-tax. So that kind of nullifies each other. Now, we say CY24, which means we are taking the entire 2 years, right, to start accruing on ROE. So that is one. So whether like CY24 is like end CY24, or I think we are talking generally about the average 24 would be significantly better. And also within that, when it's ROE accretive, we are making 70-80% ROE on the Axis Bank itself right now. So when you say accretive, means that this new business would be doing like 20% ROE by that time. I'm just putting some numbers. Sorry, just to put things in perspective.
So Vishal, again, thanks for your questions. I'll break them up into 2 parts and give you pointed answers for your consideration. We've disclosed an acquisition PAT range of 800 to 850 crores on slide 16. We've also disclosed the estimated equity requirement for the business on slide 16, which is 3,292 crores. Since the PAT is a full year number, half of the PAT will accrete to net worth, and therefore, if I look at the 800 crore value and a 3,292 crore capital allocation, you get a 21.7% return on equity on a full year basis. So that should give you a sense of why we make the comment that this business is ROE accretive for us, even in light of our current performance. Your second question on implementation, estimated integration expenses, we've said that's over an 18-month period. And if we start that implementation expense for discussion purposes 1st April 2023, 18 months will take you into calendar year 24, and that should give you a clear reason on why we are calling out calendar year 24 should result in a positive accretion.
Thank you. Mr. Vishal, may we request that you return to the question queue for follow-up questions? We'll take the next question from the line of MB Mahesh from Kotak Securities. Please go ahead.
Hey, hi. Just an additional question to what Vishal asked. The goodwill amortization moves through the P&L or it goes as a direct knockoff from the network?
Thanks, Mahesh. Under the current accounting standards, goodwill will be a charge to the P&L, and therefore it will impact the net worth through the P&L. Since it's not tax deductible, it's a one-on-one impact.
Sure. Just an additional question. If you look at the interest rate offered on both savings term as well as on the loan side, is there a meaningful difference that will accrue or not accrue once it moves into Axis Bank's balance sheet?
So Mahesh, effectively, clearly from a customer perspective, we offer a savings account rate that is better than what is currently offered to Citi customers. So the transition into the Axis family of all of the Citi customers is net accretive from a savings rate perspective for them. Loans and deposits effective pricing is market linked, so I really don't have a directional comment to offer them.
Thank you. Mr. Mahesh, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Rahul Jain from Goldman Sachs. Please go ahead.
Yeah, hi, good evening, and congratulations for completing the deal.
Mr. Jain, sorry to interrupt you. The audio is unclear from your line. Please use the handset mode.
Is it any better?
Please go ahead.
Yeah, Rahul, we can hear you. Go ahead.
Thanks, Amitabh. So, just two questions. First one is on this charge of 1,500 crores that we'll have to pay to Citibank Global. So, how would that be accounted for, or rather, how would you, over what period this charge would go off? And this profit estimate that Puneet, you talked about 800 to 850 crores, does that take into account the number or not? So that's question number one.
Rahul, thanks for the question. The 800 to 850 crore does not take into account the estimated integration costs because they are one-time costs. The PAT that we put out is our estimation of recurring PAT. The second part of your question, which is the 1,500 crores post-tax, we have currently indicated that it is over an 18-month period, so it will get charged to the P&L over that period.
Understood. So the CY24, you're saying this will be accretive. If I take this 1,500 crores into account, then it may not accrete in CY24. It may spill over to CY25. Is this how it's supposed to be understood, or CY24 takes into account the charge of this 1,500 crores also?
So the way it has to be looked at is post the integration expenses, which should run out over an 18-month period in calendar year 24 on an incremental basis, the deal is ROE accretive. If you look at a full calendar year period, then yes, I would agree with your observation that you will have a tail cost that runs into calendar year 24.
Thank you. Mr. Jain, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Sumit from Morgan Stanley. Please go ahead.
Yeah. Hi, good evening. Congrats, Puneet, for this deal. A couple of questions. So one is, you said that the pro forma PAT is broadly similar to what it was, to one that was disclosed 11 months back. My point is that if the deposit base is down, AUM is down, what has sustained the pro forma PAT at a similar level? Like, is there some thing that I'm missing? Because I just thought that maybe the profitability on that same portfolio should be lower if all these metrics are down. Just trying to understand that better.
Sumit, thank you for the question. If you recollect, what we disclosed in March of 2022 was for calendar year ending 31st December 2020. Please appreciate that through the P&L, that was a COVID-impacted year. And when we are holding the number currently, we are estimating it on a full P&L basis as we see it today.
Okay, but that was normalized PAT, right, Puneet, when you had given it for calendar 2020?
That's right. It was normalized, but the normalization was in the context of the then available facts. The current acquisition PAT estimated is on current available facts.
Okay, fair enough. Second question would be with respect to this acquisition cost. So will that be like linearly expensed? Should I assume this to be like equally over 18 months and 6 quarters, like in a sense, or will be upfronted? Sorry if you have already clarified that, but just trying to check.
So Sumit, I'm presuming you're asking me the charge out period of the integration cost that we've put out. There is a component of the integration cost that we pay to Citibank that is prorated and linear over an 18-month period, and that should represent close to about 70 to 75% of the estimated expenses. The balance will be costs that we will incur to get this business fully onboarded into the Axis platform, and that will be a function of the timing of the expenditure incurred. So long answer short for you, a dominant part of this cost is linear and should get charged to the P&L on a linear basis, subject to the comment of the balance being episodic.
Thank you. Mr. Sumit, may we request that you return to the question queue for follow-up questions. The next question is from the line of Saurabh from JP Morgan. Please go ahead.
Hi, just one question. So this pro forma PAT of 800 crores, it includes the differential in savings rate being trued up at Axis, or is it excluding that? Thank you.
Thank you for the question, Saurabh. When we presented the acquisition PAT, like I said earlier, this is taking into account facts that we know today. So yes, it adjusts for the savings accounts impact.
Okay, thank you.
Thank you. The next question is from the line of Sameer Bhise from JM Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on the closure. Just wanted to ask, in the previous presentation which you had disclosed last year, there were details on the OpEx run rate on the entity which is being acquired, or the business that is being acquired. Is it fair to assume that that number won't have changed meaningfully, given that the outcome, that is in terms of PAT, is also on similar lines?
Sameer, like we said, that was effectively calendar year
2020.
31st December 2020, normalized. We do not have an update, a granular update to that estimate as we speak. As and when we have that granular update to provide, we'll come back and make that disclosure. As of now, what we've estimated is the acquisition PAT, and that's what we've disclosed today.
Okay. And secondly, on this final figure post the true up down, whatever it lands at, just rechecking whether you said that that number will be disclosed by around 31st March 23. Is that right?
No, that's not what we said. I'd like to clarify. The true up, true down adjustment will happen basis movement in balances between 31st January 2023 to end of day 28th Feb 2023. We have a contractual period between Citi and us to decide the closing statement and the closing adjustments, and that will happen over a period of time. We're not likely to have that ready by 31st March 2023. So we'll give you an update beyond that. I think the simplistic message I would like to leave with you is, as we stand today, that purchase price adjustment should remain in a tight range.
Sure. And just lastly, but the charge off you will take it in 4Q of 23, FY23.
That is absolutely correct.
Thanks and all the best. That's all from my side.
Thank you. The next question is from the line of Prakhar Sharma from Jefferies. Please go ahead.
Good evening, everyone, and congratulations on closing the deal. Just a couple of things. One, the tax rate that is applied for the 840 crore profit, is that the one that applies to foreign entities, which are like 40-45%? So if you can clarify what is the pre-tax range or the tax rate, that will help. And second, in the fourth quarter results, besides the charge-off, would there be any other material line related to the merger that we should keep an eye on? Thank you.
So since it was a normalized PAT that was disclosed, the normalized PAT is basis taxes applicable to Axis Bank. There is no arbitrage between the 48% and the 25% of foreign versus domestic taxation. That's built into the PAT estimation. To your second question on other than goodwill write-off, what are the other kind of items that you should see in quarter four? There will be two other items that you will see. There will be a one-time policy harmonization charge where Axis policies are more conservative than Citi policies. So you will see that cost come through. And you will see certain transaction expenses which encompass bankers' fees, duties and taxes being debited. We will call that out to the best of our ability when we disclose quarterly results in April of 2023.
Mr. Sharma, does that answer your question?
Yeah, perfect. Thank you.
Thank you. The next question is from the line of Anand Dama from Emkay Global. Please go ahead.
Yeah, thank you for the opportunity. So basically, what is the reason for such a sharp rundown in the deposits? Is it that there were a lot of these corporate relationships which had the salary accounts which ran down and so also the corporate relationships? So can you just explain the rundown in the deposit?
Yeah. Hi, this is Arjun here. I'll take that. No, it's not because of a rundown in the corporate relationships. I think Subrat mentioned this earlier. This was an exercise where before the transition, we actually engaged with all our customers to actively seek their consent. So those customers who come over are those that have consented to come over to Axis Bank. So it is in that sense a one-time kind of an exercise. And it represents the net result of all the business activities plus the consent that occurred between the time of the reference data, between the time of the announcement and the final data today. So we expect that this steeper fall is actually is an accumulation of all those actions, but is certainly not indicative of the trend going forward. So the 50 to the 40 that was alluded to earlier is definitely a one-time action. Also, if you go to page 9, you'll find that the average deposit per account has actually grown over the period June 21 to Jan 23, and this is despite the fact that June 21 was the industry was at a high because of the COVID second peak that all of us were going through. So despite that, in terms of we've been able to retain all the quality customers and we've been able to retain all the active customers, deposit-bearing customers, and in fact been able to grow the deposits on a per capita basis as well. So that's an interesting point to keep in mind as well.
But any particular reason that you would attribute for the customers who did not port it out and put it into basically Axis Bank?
Yeah, there was
on the
no,
as well as on the savings side.
Yeah. So there was no single big reason which stood out. People took this as an opportunity to consolidate their holdings. As we know, many people, especially those in the affluent segment of the Indian industry, have multiple accounts. So some of them took that opportunity to consolidate accounts. Some of them moved the money to other organizations. But there was no single standalone reason which came out in our analysis as for customers to decline consent.
Okay. So any reason you feel that you can win back those customers?
Sorry, could you repeat the question? The line wasn't too clear.
You feel that you can again win back those customers later on?
Yes, we do. We certainly do, because as Amitabh mentioned earlier, the offering, starting with the fact that the savings interest rates will go up, have gone up immediately. Starting with that and with a slew of other aspects, we will now have a much more powerful offering to those customers than we had earlier. So going back to those customers and bringing to them the new palette of offers, benefits, features, products with the same set of people whom they've been comfortable dealing with, I think makes for quite a compelling proposition and gives us an opportunity to win back some of those customers.
Thank you. We'll take the next question from the line of Nitin Agarwal from Motilal Oswal. Please go ahead.
Yeah, hi. Good evening and congratulations on completion of the deal. Two questions.
One is like revolve rate has been a big mover of profitability in the card business. And so have we adjusted for this experience, which presumably may not be so good as experience with the other peers? So any tinkering that we have done in respect to valuations because of the decline in revolve rate?
Hi, this is Subrat. See, the revolve rate trends of the acquired portfolio is in line with what the trends have been for the overall industry. And like the industry, even the acquired business that we have taken over, we have found other levers to compensate for the reduction in the revolve fee income or the revolve income that everyone gets. And that you can see as part of slide 9 itself, where the monthly spends per card have grown handsomely to the tune of almost 30+%, right? So this is the trend for the industry at large, and the industry, including the acquired business and the and even Axis portfolio. We have found alternative ways to compensate for that particular reduction in the income.
Okay. And secondly, the employees that we have onboarded, 3,200 odd employees, has there been any change in their HR benefits, compensation versus what they were drawing earlier?
So I'll just highlight how the HR and the people integration has gone on. We made offers to every single Citibank employee who was part of the perimeter of this transaction. Almost 96% of the employees across grades and locations accepted our offer. Every single offer was weighed against the existing terms and existing employment benefits that all these colleagues had. And the way it was architected was no less favorable, which meant that we either matched the offer or we, in some cases, harmonized to our practices, our benefits, which are better. So we have completed that, and all of these, the percentage of employees or the percentage of colleagues who have accepted the offer at 96% is a very, very healthy number when you compare it with any other M&A transactions of this size and of this nature. So in that sense, we are in what I would consider a fairly comfortable space in terms of continuity of the services to the end customer.
Right, definitely, that's very good to know. And lastly, one clarification, is there an overlap between Citi card customers and Axis, and what will be our approach to them? Because some banks prefer to issue only one card to one customer. So how will we go about that in case?
See, today is day one. We didn't have the customer level data shared because we could not have shared it before today. There will be some overlaps, of course. Our sense is, as we get into the next phase of integration, we will get deeper into the details of what the level of overlaps are. We see any overlap between the portfolio as an opportunity to consolidate and then deepen the relationship, because these are customers who possibly are happy to have both the relationships, and then our ability to go deeper with those customers is there, and we will try our best to use that the relationship that both entities have to further our offerings to that particular customer base. But right now, because it's day one, we haven't yet got the extent of data that we would like to have before we can start analyzing and having answers for them.
Thank you. Mr. Agarwal, may we request that you return to the question queue for follow-up question. The next question is from the line of Pankaj Agarwal from Ambit Capital. Please go ahead.
Hi. Sir, what's the size of the balance sheet you are acquiring right now? How much it would add to your assets and liabilities on day one?
Thank you, Pankaj, for the question. The addition would be 27,300 crores on assets, 40,000 crores on liabilities. That's roughly about 3.5% on assets and 4.5% on liabilities.
This extra 13,000 crores would be what? Cash and investments?
That will come in the form of cash, and they'll be in the form of cash.
Okay. And second, you'll start booking income from March 1 onwards, right? So whatever Citi has earned over the last 11 months, that's not a part of the deal, right?
That is absolutely correct. We own the business from 1st March. Therefore, we start accruing income and expenses from 1st March.
Okay. Thank you. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Amitabh Chaudhry for closing comments. Thank you, and over to you, sir.
Thanks a lot, everyone, for joining the call on a short notice. This is a very, very important transaction in the history of Axis, and we're looking forward to executing on this transaction in the next 18 months or so. We'll obviously keep sharing the information with you as and when we have the information. Thanks a lot once again, and if you have any questions, you can continue to reach out to us anytime. Thank you.
Thank you. Ladies and gentlemen, on behalf of Axis Bank, thank you for joining us, and you may now disconnect your lines.